Yo guys, what is good? I hope you're all doing amazing and are trading safely in the markets. It's your boy VGOK here and I'm back with another video. Now first things first, before we get started, I just want to say a massive thank you to you all for helping me hit 1,000 subscribers on my YouTube channel. Without you guys, it would not be possible, so thank you so much. Now, onto the video. If you guys haven't guessed by now, it's another US30 case study video. And this particular trade, it was an example of a counter trend trade Wyckoff redistribution schematic executed on the 28th of April in New York session. So jumping straight into the analysis, what we've got here first are the screenshots. So what we have here is the before screenshot of the exact trade that I placed. So you can see as price was moving up, we had this downwards movement here, which there is a supply zone, which I'm going to indicate to you guys in a bit, which was up here. We had the positive move away from the supply zone, and then this move causing the break of structure below this significant higher low, then giving us validity to go for our sell entries. So that was the before photo, and then the after photo we have right here. So we can see, there's the downwards movement we wanted to see, and then coming into that 2:30 p.m. timing, that key timing I'm always going over, we can see that it comes back up to retrace into these previous areas of imbalance here before it really gives us that directional move to the downside. The higher time frame, before we get into the lower time frame and the entry, the actual sell move that I caught was in this area over here. I placed my trade around this area to catch this sell movement down into this buying POI. Now, looking at the 1 hour time frame, just before we look into the lower time frames, in my opinion, we are looking quite bullish. In this movement here, especially, this is what's given us our main directional bias. We can see that price has made a low down in here, and price that following day within that other New York session here, we can see it's gone below this low just about and reversed very aggressively to the upside, and as a result creating even more equal highs, even more liquidity to the upside. Looking at the intraday price action leading into our day of entry, switching it down to that 30-minute time frame, we can see the days prior to the trade that we took, we can see a clear downtrend forming, this clear downtrend which is a counter trend. So the downtrend I'm talking about is within all of this, right? The downtrend within this is a counter trend of the major uptrend that is happening. So as we can see, price is making these highs and lows, the lower highs and the lower lows, lower high and lower low, and so on and so forth. So we have the lower high here and the lower low that it carries on to make, which is what we catch. So knowing that we are in an intraday, downtrend, and it's going against the higher time frame. We're going against the higher time frame, so we know that we are going to be counter trend trading if we're looking to catch any more of these sells. And usually, if I'm counter trend trading, I'd like to set, an actual established TP. If I'm trading with the trend, chances are that I won't always set, an actual TP. I'd let the trade run because it is pro trend. It's going with the trend, so there's no fear of it, totally reversing after it's a decent amount of profit. Now, looking into the actual price action from, the London Open and moving into the New York Open, we can actually see from the London Open, we see this bearish move down. This very strong bearish move down, and it has broken these relative structure points within here. So within this relative uptrend that we have right in here, it has broken these significant higher lows in this uptrend. Therefore, it's confirming the bearish bias. And as we come into that New York Open sort of time, around that 1 o'clock sort of time, what we have is this bearish impulsive move down, and we're seeing it through tracing up, and it mitigates somewhere within this area. And you can see, the level of the Fibonacci retracement, it's getting into those higher 78 to 88.6 zones before, creating more of that impulsive move that we like to see. And then the whole creation of this high, low, lower high, lower low confirms that we should be looking for those sell scenarios. So just jumping into the 1 minute time frame now, looking at the lower time frame movements, so we need to see which areas of supply we need to be reacting off of or seeing reactions off of. So the first thing that pulls my eye is after we have this high, low, we have a mitigation of this high to low phase over here somewhere, and then it creates the next wave of that impulsive move down. Now within that impulsive move down, what do we actually have? The first thing that caught my eye was, let's get rid of that. The first thing that caught my eye was this drop, base, drop situation that we have in this area. Now it's not a very clean looking base as to different other examples that I've showed you in the past, but what we actually have here is, you know, this drop formation. Then we have a base of 1, 2, 3 candles that are quite small compared to the one before, and it's followed by another strong drop to the downside. We can see that the base of this area, the drop base drop area of this, is the main sort of area that took out all of these higher lows within this fractal uptrend we have right here. So that's going to be my, you know, potential zone of supply. And if we go into the replay mode and see how this actually comes into our area of interest. So this is where we've got our supply zone established, and we want to be monitoring the lower time frame price action as it interacts with that zone. So as price moves on, we can see it getting into the zone right here. It's touched the zone, it's got into the main base of that drop base drop formation. And we're starting to see some bearish movement away from the supply zone. Now, just establishing before we continue any further the actual uptrend that happened in here coming into our supply zone. So we have a low point in here, and then a high, and then a higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. And the ones that I've marked on there, in my opinion, are the significant ones because they are the ones that go on to create the further higher high within this trend. So the significant one in my eyes to break would be this one here. So this is the one that needs to be broken for us to be, you know, looking to continue this bearish movement from this zone. So forwarding the price again, you can see it's given this nice strong movement to the downside here, but not yet broken our desired area that we wanted to see. And as price carries on, in this move here, and just note what time this move happens, at 2:25 p.m., 5 minutes before that New York stock market opens. What have we got? A nice bearish closing candle that closes nicely below, you know, the body of this higher low, significant higher low area. You can see that we get the break of structure there. You know, it's closed below, which is fantastic, and then we are then ready for our sell entries. Now, me personally, I had my sell entry based off of this imbalance fill and having my stop loss just above the highs around here. So I'd actually put my stop loss above this high, giving us an 11-point stop loss. And then in terms of where I look to take profit for this trade, I knew from the 30-minute time frame, you know, I had a good demand zone, you know, in mind over here, and I was looking to just to trade it into the imbalance fill of this 30-minute demand zone. So having TP just down into this area here, giving us that 1 to 10 risk to reward ratio roughly. So going into the 1 minute price action again, and we'll see how price actually reacts to this scenario. So there we go, my entry is active, getting good movement. It does come up to this area, and something that I didn't realize until afterwards was there is this area here of imbalance that had not been filled in yet. And again, if you wanted to look at it in this sort of way as well, you can do. There's the drop, the base within this little doji candle, and then the drop that takes out these previous areas of demand. So it did come up slightly higher than I anticipated, but the stop loss was high enough for it to account for this. And then we see at 2:30 the volatility kicks in and we get our desired direction. And then looking at how it goes on to hit the final take profit. And in this scenario, there's only one TP for me because it was a counter trend trade, so I only wanted to take profit once and be out of the trade as quickly as possible. And as price goes on, we eventually hit that final take profit point at that 30-minute imbalance fill. So, at time of execution, we're looking around about that 2:30 p.m. time, and then within half an hour, we've already hit our 1-to-10 risk to reward ratio right there. But looking more into this whole consolidation phase, I'm going to map out how we can look at this into an aspect of a redistribution schematic. So zooming into this actual price action, what we can see is at one point, this sideways piece of price movement looked like it was an accumulation phase. So you can see in here, the start of the whole schematic is looking like this accumulation phase. We've got a sort of a spring movement here, then it goes onto the test, breaks structure to the upside and keeps going up, just like in a normal accumulation schematic. But usually after an accumulation schematic, we want to see strong price movement to the upside to know that this accumulation was valid and it's going to go on to create more higher highs. In actual fact, what we actually get happening is price eventually moving up into our desired supply zone, and we've also got the creation of this creek formation within the redistribution schematic. So we've got this creek formation within the redistribution schematic. Around this point, it's just basically a trend line that can be drawn to connect these areas up, and then this movement here gave that jump across the creek, or that break of structure to the downside, however you guys want to look at it. But the whole redistribution cycle will look something like this, just like a reaccumulation. The first half of a reaccumulation will actually look like a distribution, and then it will change into an accumulation. In the same way, the first half of this, so first half looks like accumulation. We then get the creation of this creek, and then we're waiting to see a positive reaction away from a supply zone, which is where our general UTAD area will be. And it's not always going to be in a supply zone. It could be creating some sort of equal highs, and then manipulating those equal highs and then coming down. It's a similar sort of thing. We want to be seeing a strong movement away from supply, or a manipulation of highs, after it's created this first half. So we get the UTAD, and then we eventually get the BOS, which I was looking for within this move here. So there is the break of market structure, and then simply waiting for our entries, either here or the better entry would have been up there, giving a much better risk to reward ratio. By now, guys, you guys should be seeing some sort of pattern with these entries that I'm taking. We're always having that extra bit of patience, waiting for, this supply zone to be met, and then ideally respected, and then validated by giving us the break of structure, and then getting in our entries. We're not entering within the supply zone. We're waiting for evidence, waiting for that break of structure away from the zone, and then getting in. So there we have the full breakdown of this 1-to-10 risk to reward ratio Wyckoff redistribution schematic on US30. I hope you guys enjoyed this video. I hope you guys learnt and took value from this as well. And if you did, please do like, share and subscribe. And I'll see you guys in the next video for more of that trading source.